Franklin India Multi-Asset Solution Fund. There are two ways in which investors can diversify across asset classes like equity, debt, and gold when they invest through mutual funds. 1. Choose and invest in individual funds in the proportion of asset classes matching one's risk appetite. For example, higher equity allocation for if one has a higher risk appetite. Or 2. Invest in a mutual fund which offers a combination of asset classes in a single fund. For example, a single fund which invests 60% of the money in equity assets or 40% of the money in debt assets or vice versa. Such funds are called hybrid funds. In this video, we look at hybrid funds which offer a ready-made diversified asset allocation combination to investors, thus avoiding the hassles of rebalancing asset classes on their own. Hybrid funds offer different asset classes either as a portfolio of stocks or securities, or as multiple funds within a fund called a fund of funds product in the stated proportion of asset classes. Why invest in hybrid funds? Financial prudence advocates that an investor must invest across asset classes to achieve diversification. This can be done via asset allocation. Diversification helps lower the risk in a portfolio, as no two asset classes generally move up or down at the same time, and this in turn aims to provide higher risk-adjusted returns. Asset allocation in a hybrid mutual fund moves as per the mandate mentioned in the offer document. One can allocate across equity and debt mutual funds manually, but this requires one to regularly monitor the allocation and rebalance it periodically to the original asset allocation. For example, if the asset allocation was a 60-40 debt-equity mix and it changes to 70-30 after 1 year due to market movement, one needs to sell debt or buy more of equity to bring the ratio back to 60-40. This is called rebalancing. While rebalancing across individual mutual funds, it is also important to check for exit loads and tax implications in case of redemptions. However, in case of hybrid funds, there is no impact of exit load and tax when the fund manager rebalances the allocation. Hybrid funds offer a ready-made asset allocation combination wherein one can either choose A. A static or range-bound asset allocation, like a balanced fund which has a higher allocation to equity, or a monthly income plan which has a higher allocation to debt. Or B. A dynamic or a variable asset allocation, which uses a formula or strategy like, say, price-to-earning ratio to allocate across asset classes. These funds swing between an equity orientation to a debt orientation depending upon the value of the formula. Why does a combination of asset classes work? In this table, you will realize that the same asset class does not always give the best returns. Sometimes it is equity, sometimes gold, and sometimes debt. However, it is difficult to predict which asset class will do well year on year. One needs to therefore invest in a combination of all asset classes to reduce the risk of underperformance in one asset class. As per this table, a combined or a hybrid portfolio may not have provided the best returns, but has also not provided the worst returns and has stayed on a middle path. A hybrid fund thus helps to follow the middle path. Let's look at the key benefits of investing in the Franklin India Multi-Asset Solution Fund. This is an open-ended fund of funds scheme which invests across asset classes like equity, debt, cash, and gold. It seeks to provide an asset allocation solution to investors by primarily investing in Franklin Templeton's local equity, fixed income, and liquid products besides domestic gold ETFs. The fund manager adopts a solution-oriented asset allocation approach which endeavors to achieve capital appreciation and diversification through a mix of strategic and tactical allocation. The allocation to equity, debt, gold, and money market instruments is based on a time-tested proprietary model. Strategic allocation determines long-term allocation to different asset classes and takes into account long-term trends in these asset classes. while tactical allocation takes into account the current situation based on a combination of underlying indicators like economic, valuation, and momentum or sentiment indicators. This fund invests across asset classes in varying components. Equity component, either of Franklin India Blue Chip Fund or Franklin India Prima Plus, in that order, depending upon the corpus limit for each fund. The equity allocation can be in the range of 10 to 75%. Fixed income component, either of Franklin India Short-Term Income Plan or Franklin India Income Opportunities Fund, in that order, depending upon the corpus limit for each fund. The fixed income allocation can be in the range of 10 to 75%. Gold component, Goldman Sachs Gold ETF, which is now our shares, and Gold Bs of Reliance Mutual Fund. The allocation can be in the range of 1 to 50%. And lastly, cash and money market component, Franklin India Treasury Management Account. The allocation can be in the range of 0 to 50%. The fund dynamically changes its allocation to different asset classes on a monthly basis. Ideal investment horizon. Since the equity component can swing in the range of 10 to 75%, Franklin India Multi-Asset Solutions Fund can be a predominantly equity-oriented fund or a predominantly debt-oriented fund, basis the allocation. Hence, we recommend a longer investment horizon of 5 years or more, which suits both an equity and debt-oriented fund. Every investment you make must ideally be linked to a financial goal, and this goal could be of varied durations depending upon your investment needs. Since the Franklin India Multi-Asset Solutions Fund is ideally suited for an investment horizon of greater than 5 years, the fund is well placed as an option to consider while planning for your long-term financial goals such as higher education, planning for your child's marriage, building a retirement corpus, or even if you're seeking long-term wealth creation. Who should invest in this fund? This fund is a great option for investors looking to invest in a single fund that invests across the equity, fixed income, and gold asset class combined, with the benefit of dynamic asset allocation based on the prevailing market dynamics. This fund should also be considered as an option for investors seeking to lower their portfolio risk in a single fund, based on diversification across asset classes and wanting to avoid the hassle of periodical rebalancing. This fund helps invest across multiple asset classes like equity, debt, cash equivalent, and gold, through a single fund which automatically allocates among these components using strategic and tactical allocation. Let's take a look at the tax structure. Liquidity. You can redeem your investments in full or in part on any business day. The redemption amount is normally dispatched within 10 working days from the date of redemption. You could either receive this amount as a direct credit into your registered bank account or as a physical check which you can deposit into your registered bank account. What more do you need to know? Let's get to know some fund facts of the Franklin India Multi-Asset Solution Fund. For more information, please feel free to contact your mutual fund distributor or registered investment advisor. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.